What's up everybody? Welcome to the Stocks channel. Today we had another volatile day in the stock market and there's a lot to go over yet again. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we see SPY going down 0.89% today, and we did get a gap down open, and we do have a gap that's now above. The gap will close at a price target of about 417.70, and remember, gaps typically get filled, so we want to pay close attention to that level. We do have upside resistance on SPY because we did gap below support at 415. That's also going to be the bottom of that gap, so that will be a strong resistance level that if the bulls can break above, that will be bullish price action. Remember, we did close below that 20 simple moving average today, which is right around 416. This is the first day that we've closed below the 20 simple moving average on SPY, going all the way back to March 24th. Now do note, on March 24th, we did close below that level, and the very next day we closed back above it and we did start running in this bullish rally. So one day below the 20 simple moving average is a warning sign, but it's not something we need to be overly concerned about until we get that second day confirmation close below that level. So right now this is a warning sign, no doubt, and you can see that the moving averages are starting to bunch up right around that 416 level. That could mean that we're about to lose the bullish trend and SPY is getting ready to go lower, or this could be a total bear trap and a total breakdown fake out before we start going back higher towards our price targets. So right now on SPY, even though we are below that 20 simple moving average, we still do have a bull trend. So we have not invalidated the upside price targets at 423 and 427. That's subject to change if we start losing the bullish trend, but right now those levels are still price targets that we're watching to the upside. Now in order to get there, we will need to break back above 416 and our resistance level at 418.50. Downside support levels on SPY that are going to be very critical right now are 412 and 408. That 50 EMA is now trading right around 406, and that's also somewhat of a support trendline level. Don't forget, we do have the gap below around $400, and gaps typically get filled during a correction. So if we do start breaking down and this trend does reverse and go into a bearish trend, we will likely fill that gap at $400. So watch that gap very closely in the event that we do start breaking down from here. Also note that we did see a huge increase in volume today, which is a great sign, and we finally have volatility back in this market. As a trader, volatility should be your friend, and just remember to get in and out of trades much quicker and don't try to hold positions overnight. There's no reason to try to guess if the market's going higher or lower right now, and the market is getting choppy and it is trying to decide if it wants to go higher or lower, and right now you're better off just being a trader and taking advantage of this volatility. We had huge price action swings all day long, and there was plenty of opportunities to make some solid trades. Next up is the NASDAQ 100 triple Qs, and we saw a huge gap down on the triple Qs today, gapping down all the way down around 320, which was a support level. We did fill that gap from back in the beginning of April, which did close right around that 323 level. One thing to note on the triple Qs is there was a ton of buyers of the dip. We opened up way down here around the high 319s and closed all the way up here at 325. Remember, the critical line in the sand level that we wanted to pay attention to on the triple Qs was right around 324, and we did close back above that level. However, we're still trading below the 50 EMA for 2 days in a row, and we are starting to develop some bearish trending. We're not in a full bear trend just yet, but if the price action continues to close below the 50 EMA, we will be in a bearish market in the triple Qs in the very near future. So downside critical support levels for the triple Qs are 324, 320, 316, the gap fill at 315, and then we have one more support level down here right around 309. Upside resistance levels on the triple Qs are going to be that 50 EMA right around 329, and then that next level is right around 334, with the 20 simple moving average currently trading around 335. So the bulls still have a ton of work to do to break through some of these resistance levels, and remember, there's no strong trend in either direction, and we do have more volatility in the market. So expect the market to be whipsawing around, and make sure you have a solid trade plan and you're not getting whipsawed. Don't be switching from bear to bull trades when you're not sure what you're doing, because you're going to just lose money in both directions. Be very disciplined and know these levels very closely, and make sure when we get to these different critical resistance and support levels, you know exactly what your trade plan is going to be at these levels. In order for the triple Qs to get bullish yet again, we still need to get back above that 20 simple moving average, which is all the way up here at 336, so we still have plenty of work to do for the bulls to get back above that level. The bears want to keep the price action below this 50 EMA as long as possible, below that critical resistance level at 329, and a breakdown below 320 could lead to the next leg lower, which could bring us down to the 316 or 315 level. So it's definitely going to be a very interesting week in the triple Qs, and we definitely see some huge candlesticks, which does represent all of the volatility that we're seeing. So have that cash position ready and get ready to make some solid trades with all of this volatility in the market. Next up is the Dow Jones, and we see the Dow Jones going down 1.39% today, closing right on top of that 13 EMA. Intraday, we did test that critical support level, which was that 20 simple moving average right around 341, and that level did act as support intraday. We can definitely see a big spike of volume, and we definitely see a huge gap down, and that gap won't get filled until we get back up to about 347. So remember, gaps typically get filled, and right now on the Dow Jones, we have a giant outstanding gap just above the price action, which could get filled very quickly. So don't get overly bearish, because looking at the Dow Jones, we're still trading above a positive sloping 20 simple moving average, and we still have a bull trend. This is not the time to be trying to call a top, because we've already had this nice pullback. It could be time for the Dow Jones to continue to go higher. So watch the upside resistance level at 347, the price target's at 350, and then the next price target is going to be at 360 on a break and close over 350. Downside critical support levels are going to be 341 and 337, and on a close below 341, the bullish trend could start reversing and we could start seeing more weakness in the Dow. But right now we got to trade the chart in front of us, and we don't see that happening just yet. Next up is the Russell 2000, which went down 0.32% today. The Russell 2000 also gapped down right on top of that 215 support level and did see a lot of buyers of the dip and did run for the rest of the day. We did find resistance at the resistance trend line, which was the breakout of that wedge right around 219. We still have to get back above that 50 EMA right around 221, and we're still trading below that 20 simple moving average. So the Russell 2000 definitely has some bearish price action, trading 2 days below that 50 EMA, but it is currently holding up above that support level at 215. We could see no decisive trending for the bears or the bulls on the Russell, so watch the critical price action at the support levels of 215, 209, and the support trend line right around 206. Critical upside resistance is going to be 219, the 50 EMA at 221, the 20 simple moving average at 224, and the next resistance level at 227. Next up is Arkk, which went up over 2% today, and we did see a huge amount of volume on Arkk today, and that does mean that we did likely see a capitulation or a bottom in Arkk. Remember, we still do have a support level down here at 96, but we're still hanging around the support level around 106 after today's bullish price action. Remember, Arkk ETF went up over 2% today on a day that the rest of the indices were red. That is definitely something to take note of, and it could be possible those hyper growth stocks in the Arkk ETFs are finally going to make a comeback. So pay close attention to Arkk's price action and watch these critical levels at 106, 109, and the breakout level right around 115 to 16. Downside support, if this was not the bottom, is still going to be down here at 96. Next up is the VIX, which is our fear indicator, and we did see volatility spiking today with the VIX because we did see the VIX starting to break out of our upper resistance level. We see the Bollinger Band squeeze is firing, and these Bollinger Bands are expanding, but it's still possible that this Bollinger Band squeeze is going to fire to the downside. But right now, you can definitely see the VIX wants to go higher, and that's definitely a concern for a major stock market correction. So right now, the VIX is over 20, and the longer it stays over 20, the more volatile things could become. So watch this breakout level right around 21.6 very closely, because if the VIX does continue to go higher from here, we should and probably will continue to see selling in the stock market. Now, if the VIX breaks back down and starts going back below 20, that could be a very bullish indication, because that means fear is leaving the market, and this volatile correction in the tech sector and the volatility we've seen across the stock market could be coming to an end, and we could be going up for another leg higher. So right now, draw a line in the sand at VIX 21.6, and above that is going to be volatile, and a correction is likely here, and below 20, we likely saw the end of the volatility and we're getting ready to go higher. Next up is gold, which is still consolidating its newfound gains, and it is building up a level of support above 1829. We could see gold start running up to the next price target at 1876 in the very near future, and remember that gold is in a full bull trend. Next up is silver, which continues to get to our price target right around 2760 and just can't seem to break above that level. We need to see silver break back above 2760, and then we could see price targets all the way up here at $29. We do have a resistance trendline level we need to break out of, which is going to be right around 28, and we should have downside support right around 27.3 and 26.5. Next up is Bitcoin, which is currently up a little bit over 1.2% and still holding above that support level right around 55,600. Bitcoin is consolidating over support, and it's waiting for that 20 simple moving average to get positively sloping and cross back above the 50 EMA. So Bitcoin could be going back into a bull market in the very near future. So watch critical breakout level at 61,000, and a break and close over that level could mean we're going up to new all-time highs at 67,000 and 75,000. Critical downside support for Bitcoin is going to be 55,600 and 48,000. Next up is Amazon, which had a bullish day today, going up over 1% and closing back above that support level at 32.09. Remember, this is a critical support level and Amazon is getting back above that level. The price action is still below the 50 EMA for 2 days in a row, and we will have upside resistance at 32.60 and the breakout level right around 33.54. Downside support on Amazon is going to be 32.09, and a break and close below 32.09 could mean we're going all the way back down to 31.30. Next up is Tesla stock, which dropped 1.88% today and did close below that support level at 618. We do have a new support level below that opened up today right around 594, and that level could break down and we could see Tesla going back to 557. So upside resistance is going to be 618, and then that next level is right around 668. If Tesla can get back above 668, that would be bullish price action, but right now be careful because this is somewhat of a falling knife situation, and Tesla could still be coming down to the 550s. Remember, Tesla is very close to being into a full bear market. We just need to see that 20 simple moving average crossing below the 50 EMA, and then that will be an opportunity for the bears to sell Tesla at resistance and continue to drive it lower. So this is a do or die situation for the Tesla bulls to get back above these support levels. Next up is Apple stock, which dropped about 0.75% today, and Apple did open up a gap above. The Apple gap will close at a price target of about 126.8, and that does mean that Apple will have resistance around that level. Downside support on Apple is right around 125.8, and if that level does break down, we could be coming all the way back down to support levels of right around 119. Upside resistance is going to be 127, 128, and the 50 EMA at 129. Next up is the financial sector, which had some weakness today, going down over 1.7% and closing back below the 5 EMA. The financial sector is still in a very strong bull trend, so it could be continuing to go higher from here. On the industrial sector, we dropped 1.48% today and also closed back below the 5 EMA. We did open up a gap above, and the industrial sector is still holding on to its bullish trend. The healthcare sector dropped over 1% today, closing back below the 5 EMA, but still holding on to the bull trend. The energy sector dropped over 2.5% today, closing below the 5 EMA, but still holding on to the very strong bull trend. So going back to the S&P 500, you can definitely see that there was a lot of selling across the board today, and we did see a lot of selling in the sectors. However, those sectors are still in very strong bull trends, and it's completely normal to see selling after we see a monster run up like we saw in the financials and the industrials. We need to continue to keep an eye on the price action and watch the trends very closely. Remember, SPY is closing below that 20 simple moving average, which is a warning sign, and that does mean that the SPY bulls are under pressure to get back above about 416. If the SPY bulls cannot break above that resistance level, the bears could start taking over and we could see SPY going much lower. So remember to watch the critical levels on the VIX, and if the VIX does start going higher, that will mean we're going into a deeper stock market correction. Remember, I'm doing intraday analysis and updates on the Stocks Channel Discord to always help you stay on the right side of this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of the video. So next up is our trade idea, Disney, and we see Disney going down about 1.43% today, but still closing above that critical support level at 181. Disney's earnings report is coming up in just a couple more days, and that could be a very volatile time for Disney. And just remember, going into earnings, it could be a monster move in either direction. Right now, Disney is looking pretty beat up, but it continues to hold up above support, which is actually a very bullish indication. If Disney can try to break back out, it needs to get back above about 182.4, and it will have resistance at 185, 188, 191, and 193. The downside support level to pay attention to is 181 and 178.8. And remember that it's some risk level below these support levels is where you want to set your risk in this trade. There is a ton of upside potential for just a small risk, but do remember that earnings reports can have monster moves in either direction, and it could be a gap up or a gap down, so plan accordingly. Also remember, I have more trade ideas weekly on the Stocks Channel Discord to help you absolutely crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. Remember to stay nimble and flexible in this volatile market. And as always, I will see you in the next episode.